I think, noting the stock price decline, there was a bit of a change in their strategy related to the Norwegian Cruise Line brand, trying to get more families and kids and all that. We could talk about that, but that does have some slightly dampening impact on yield growth for the fourth quarter and next year, which is what I think the stock was reacting to.
So this is the idea that they're broadening their customer base, not just targeting the super high income consumer, which by all accounts is doing just fine in this economy, whereas the lower income consumer and the mass consumer perhaps is struggling with rates staying fairly elevated and a lot of question marks over their job prospects. What is Norwegian Cruise Line's strategy here, certainly compared to its peers like Carnival and Royal Caribbean?
I think it's twofold. I think number one, to try to attract more of a family audience, increase the core customer base of the Norwegian Cruise Line brand, and also by having more shorter duration cruises, maybe with home ports closer to where people live, that could result longer term in kind of more efficient operations and some more more savings on the net cruise cost per net unit cost side. But it remains to be seen. And I think that's why there's a little bit of caution because the near term effect will be a slightly dampening impact on the overall mix of yields. Cabins filled with children or families may have a slightly lower combined revenue yield than a different type of customer audience.
Typically, the cruiser, they're pretty loyal people, Brian. How do they typically react or how do they spend during what could be maybe a little bit softer economic environment?
So if you judge by the current environment, the overall bookings pace, I think for the third quarter overall was up 20%. The outlook for next year is quite good with at least modest yield growth. So I think we're seeing still a pretty steady pace of consumer demand. Obviously, that could always change if we see a more severe economic downturn, but the overall pace in terms of bookings demand, notwithstanding this kind of tweak in marketing strategy, has been quite good.
Brian, how does Disney fit in here? Because they have a cruise division and by all accounts, it's doing really well. They have a very loyal customer base and perhaps that customer base then grows up, matures and moves on to the other cruise companies. But how does Disney's success impact the pure cruisers?
I think with respect to Disney, it's such a small relative percentage of the overall cruise industry capacity. It's an interesting strategy on a certain side of the business, but it's not probably decisive in terms of the overall industry because Carnival and Royal Caribbean together are 80%-ish of the overall industry capacity. So Disney is an important but smaller player.
Marriott, they reported some numbers today. I see the stock's up about 2.9%. Talk to us about Marriott. What do we learn about the hotel biz?
I think the hope for Marriott's perspective is that 2026, in terms of that pace of revenue per available room, RevPAR growth, will kind of match this year's 1.5% to 2.5% pace. What we are seeing is that luxury demand, particularly in the US, Asia Pacific countries outside of China, are all looking pretty good for next year, and they were in the third quarter. You get a little bit of a bump next year from the FIFA World Cup, which could help RevPAR growth a little bit. I think the weak spots in lodging are probably the limited service segment, individual business travel, certainly government workers. It's much as we've seen in other parts of the travel industry, the higher end luxury consumer is actually faring better in terms of their pace of growth than more limited service economy segments.
Brian, Marriott has what's called an asset-light business model where basically the company expands its hotel portfolio through franchising, through management agreements. They don't actually own the properties because that's a burden on the balance sheet and everything else. So are there any hotel companies that actually own their own properties, or has everyone shifted to this asset-light business model?
So the marketing strategy or the strategic setup of Hilton, Marriott, Wyndham, very similar in being kind of to a large degree asset light in the case of Marriott and Hilton and Hyatt in particular. Marriott does have a couple of owned hotels, but it's a smaller part of the business. So a lot of the ownership in the business is related to the hotel, the hotel REIT business, right? So you do have a separation of ownership and management, which is really true both in the casino industry and the hotel industry.